This, I think, is a very significant project in the uranium space. So the average grade is about 5,300 ppm. It puts us more in the Athabasca style deposit. It doesn't require a lot of tons to make a lot of pounds. At an all-in sustaining cost, of course, below $20 a pound. Our cash costs are about $16 a pound.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, please give us a thumbs up and do leave your comments below. It helps us to try and understand what you're thinking, what questions you want us to ask, and indeed what you think of the company. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, to see more videos like this, click the notification bell. We speak today to Stephen Roman, who is the CEO of Global Atomic. They're a TSX listed uranium junior and it's fast becoming one of our favorite uranium stories. They've got a double revenue stream, one from their Turkish asset Befesa, which is a JV, which gives them a 40 to 50 year annuity stream based on the zinc price. Quite nice. And the second being their Dasa asset in Niger. Now, we talked to Stephen today about the announcement about the PEA, which they've just released. He tells us it's a bit more like a PFS. Of course he would. And we look at the timeline through to a DFS when they can make a decision as to how they go about building this. This PEA, though, is specifically about a phase one development of a higher grade flank zone, which gets them into production. And more importantly, says Stephen, it gets them into this uranium cycle. So lots to talk about and lots to discuss. So look in the description below. Anything that interests you in particular, click on the relevant timestamp and that'll take you to that part of the video. Anyway, let's hear what Stephen had to say. Stephen, how are you, sir?
I'm fine, Matthew. How are you doing?
I'm not bad. Locked up at home.
I'm in snowy Toronto. We just had a blizzard here this morning. I understand the weather's a little better in
You're
London.
Kidding. No, it was sunny. It's all sunny here. It's 20 degrees, which, I mean, I don't want to talk to an Australian right now. They've been telling me it's 35 degrees. You know, no one needs to have that conversation. But anyway, so you're holed up safely at home, keeping busy. You've got a press release out today about your PEA, and I do want to talk to you about that in a minute. But first, I need to get your take on what is going on in the marketplace. The last 2-3 weeks have been a bit crazy. You've had Cigar Lake shutting out for a little while. You've got the Kazakhs doing the same thing for potentially 3 months. You've got Rossing shutting down. You've got Husab production affected. Australians still seem to be marching on. What's your take on all of this?
It's a strange world out there, Matthew, with this virus floating around. And of course, you know, a lot of these mines like Rossing, low grade, high cost, Cigar Lake, similarly. I mean, all of these mines, I guess, because of COVID now have shut down. That's taken a huge chunk out of the uranium supply chain. I would, you know, if I was a utility, I think I'd be getting nervous about now on, you know, where they're going to start getting supplies, because their long-term contracts are coming due in the next year or two, and they've got to be out there looking at who can fulfill the next 10-year supply stream for them. You know, it's obviously moved the uranium price up quite significantly here over the last couple of weeks. And, you know, some of these mines are going to take a bit of time to restart. So, you know, I think the uranium side is getting a bit of a boost here, and hopefully it's not short-lived. I think we'd like to see it moving ahead, you know, to where it should be.
Well, you've got a part of the audience is saying this is the white swan, this is the catalyst for change. You can't remove that amount of pounds out of the marketplace without it obviously affecting the supply, the demand side. You've obviously been there, done it before. You've built a uranium mine, got it into production. You know what it's about. I'm intrigued as to what you think the utility guys are actually thinking right now, because the other thing going on in the background is obviously this, you know, the gas prices are being affected by the war with Russia. well, not the war, the war between Russia and the Saudis with regards to pricing and output. Are you having conversations with any utility guys at the moment? Can you give us a sense of how they're going to be judging this situation?
You know what? The last interaction I had with a number of utilities was at a uranium conference in Nashville in the fall, and this is obviously before COVID. And the general consensus at the Nashville conference was that they have to start getting back into the market. So that's a very positive sign to me that they are definitely thinking about it. And I think with all these closures now, that's going to push them over the edge, that they're going to have to start scrambling to find supply. So, I think it's good for the whole sector.
Do you think so? Do you think price is? We've had a bit of, we were at, so 2 weeks ago we we're at $27. We're at just over 30, nearly.
Well,
31.
I
What's
think
going to happen?
Cameco and Kazatomprom, the two big players, they would probably like to keep the price, below $40 a pound to keep many others from getting into the market. So, I think if it moves into the $35 to $40 range, you're going to see a bit more supply coming in, but probably not before that.
Well, I do want to talk about your PEA because there's some quite attractive numbers in there, which you must be pleased about, but we'll talk about it in a second. To that point, how does supply come into the market? If you've got a bunch of young pretenders, as it were, juniors who have got an asset, not necessarily a great asset, and not necessarily the cash to be able to do too much about it, but it is uranium, so people are getting excited about what that could mean. Do you think that all uranium juniors currently in the marketplace are going to survive because of this price recovery which people are expecting, or do you think that it's going to move in small increments, i.e. the lowest cost producers who can create a margin for themselves whilst the price recovers are going to be able to step up to the plate first? And what indeed does that mean for the people who need 50, 60, $70?
That's quite a question.
It's a long one, right? Are there going to be winners and losers is what I'm asking.
There's some tremendous uranium projects in the Athabasca Basin. They have an issue with permitting timelines and CapEx. So I don't know how much money would be available to build a project that potentially is not going to be permitted for 10 years. So, I think what people have to look at right now is who can actually come into production in the next 2 to 3 years that could actually start supplying the utilities when their contracts run out in 2 years. The big high-grade projects won't be there. There's some smaller producers, some in-situ leaching in the United States. That's 1 million pounds, 2 million pounds a year. It's small scale. So, I think aside from Cameco turning on production at $35 to $40 a pound and Kazatomprom doing the same thing, the new projects, there's going to be very few that actually make it in this cycle.
Okay, so in this cycle, see what intrigues me, and what we talk a lot, right? What intrigues me about you guys, and I think from what I read, people appreciate your business model. And the business model being you've also got a zinc revenue stream component with your Turkish JV, Befesa. Now, that's going to help because it means you're not going to dilute shareholders continually. There's the ongoing income stream there. Now, you have made a couple of statements recently with regards to that, because obviously zinc price has been hit a little bit. So you're putting out the timeline there somewhat. Can you just tell us about what's going on in Turkey first of all? Are they still working? Are they still able to operate?
Yeah, good question. Turkey is still working. Of course, the government has imposed some protocols that everyone is following. Where we are in Eskedron, it seems to be virus-free at this point in time. but we are using, very specific protocols to keep people away from each other. The plant, of course, is brand new. So it was just commissioned in Q4 last year, 2019. So, it's a highly automated plant. So you actually don't need a lot of people there. And, so it's still running at capacity currently.
Okay, so, but in terms of the statements you've made, you said like there was a sort of 12-month payback period, but obviously zinc prices
That's right.
have been, a little bit lower than they have been.
Yeah.
That's going to take a little bit longer. Can you give us an idea of the timeline there?
Yeah, so when we started the plant, the zinc price was between $1 and $1.10. As a result of the current market conditions, it went down to 85 cents a pound. So what we're telling people now, rather than a 1-year payback of our capital there, we're talking about 2 years at this point.
Right.
So, the dividend stream coming from there, we get monthly management fees and sales commissions that effectively cover a lot of our G&A in the company. But the big dividends that are typically awarded once a year after the AGM, they would start later than we expected.
But that is quite a long and annuity stream of cash for you.
Well, I mean, the plant will be running for the next 50 years, I would suspect. It's a brand new plant, so
I'll put that down as a yes. Yeah.
yes.
Okay. Right. So that's the sort of interesting part of the business model. But let's come to maybe your PEA, because I think it'll allow me to understand better where you're positioning yourself in the market, because there's some clues there. You're talking about getting in earlier into the cycle than some. So why don't you give us the big numbers on the PEA? Tell us what you announced this morning.
Well, this morning we announced a phase 1 mining project at our flagship Dasa project in Niger. This is a 250 million pound deposit. And over 2019, we did a lot of trade-off studies on how it should be mined. Open pit, underground combination, startup underground, then open pit, or vice versa. At any rate, what we've been able to achieve here, and with money actually that was provided from our Turkish operation, we did a big round of drilling, and we defined an area we call the flank zone, which is a high-grade section of the deposit that comes close to surface. And so what we've laid out here in this PEA is a ramp access underground mine that is basically mining about 5,300 or 0.5% uranium. And if you notice in the press release that the majority of the pounds, there are about 30 million pounds of the 48 million pounds we'll be mining out of this flank zone, is running at over 1% uranium.
Right.
So the average grade is about 5,300 ppm, which, for an African uranium project is outstanding. It puts us more in the Athabasca style deposit at, 1% plus there for most of it. And it obviously then doesn't require a lot of tons to make a lot of pounds. So we've engineered 1,000-ton-a-day operation that's going to produce about 4.4 million pounds a year of yellowcake. At an all-in sustaining cost, of course, below $20 a pound. Our cash costs are about $16 a pound.
I mean, that's the remarkable number there. Being able to produce at less than $20. I know you have said it before, but I'm not sure the market believed it. And you're saying that is achievable. I mean, the other thing that stands out is we knew this was a big resource. The available pounds here in terms of, I presume, phase 2 it is huge.
Right.
But this project on its own at $35 is showing, you're indicating here, what, 26% IRR at $35?
Yeah, that's after tax.
So yeah, that's a nice number. You must be happy. Were you expecting this?
Oh, it's great.
Were you expecting it?
Well, I think when we started working on the model of the flank zone as an underground high grade operation, the numbers started coming in because the resource there is so good, and it leads you into the lower sections of the deposit where there is also a lot of good high grade material, but of course it needs to have more drilling, which you would do during your mining process. As it says in the press release, we'll use this phase one to actually produce uranium quickly, but also to develop the rest of the deposit.
Okay, and the thing that interests me is, again, the business model. Like some people would say, well, do it all in one go because it's a much bigger resource, and therefore it's going to be much more attractive to big players, etc. So why are you doing it this way? Why get into production early? I assume is to hit this cycle. What you were saying 5 minutes ago.
Well, Matthew, at the end of the day, we're a mining company. We like building mines. I think with uranium, and obviously you can mine this at a much larger scale. It's going to take more capex. Like we came out with our 2018 PEA that showed 300 million capex doing twice as much production on a much larger scale, but the grade was lower, the capex was higher, and for a junior mining company, it was just too much. The other thing to consider in the uranium business is you don't want to come out there with an 8 to 10 million pound a year project, because where are you going to sell it? So what we want to do, and we think the sweet spot is, between 4 and 5 million pounds, is just exactly where we came in. It's a marketable amount of uranium. 2 or 3 utilities could take that up every year, and you don't have a huge issue moving your product.
Okay, because I'm looking at 4 to 5 million pounds a year compared to like the US producers. I've spoken to both of them. They're talking about 1 to 2 million. So you are could be a meaningful producer within a short time frame to fit into a cycle where you think utilities are going to be needing to, definitely going to be needing to fill up their inventory levels, because where else is it going to come from? So I just wanted to know, how do you come? Have you had conversations with utilities? Do you know that this plan works better than getting out there and producing a much bigger project, which may be more attractive to Chinese investors, for instance? Because we've heard all models here. So why what was the data that you had to say, no, let's go small, let's do it now, and let's hit this cycle, and I guess what you're trying to say is we'll at least be in control.
That's right. This is something that we can do with our capability and our financial horsepower. If we're talking about projects that are into the hundreds of millions, it's something that we would not be able to do. So I think just like many mines in days of old would start with a smaller scale operation and grow the business out of cash flow, we can do the same thing. I mean, there's nothing stopping us from producing more if the demand is there.
Okay, but let me talk to you before we get too excited, because it's quite easy in the current climate to get excited about uranium. The two yellow commodities are getting quite exciting at the moment, so
that's right.
You have to excuse me. But you've done a PEA. It's just a PEA, right? It's not a PFS.
Well, actually, we've done the PEA to a PFS level.
Okay.
So this will form the core of our technical material that's going to be submitted to the government for our mining permit. So what we're planning on doing now is we're finishing our hydrogeological work around the mine, as well as our environmental impact statement. These are necessary to achieve our mining permit. So really the final bits, which would be some more geotechnical drilling and final engineering, we can do that subsequent to getting our mining permit. So the idea is to submit all of this material now as a final technical report to the government by the summer, by June, July, with our application for a mining permit.
And what does that allow you to do? Because I am going to ask you in a second about money, because you're going to need to raise money at some point. But what does having the mining permit allow you to do? Why are you focused on that?
Well, I think it's a huge catalyst for our operation, because once you have your mining permit, you're unrestricted, so you can raise money, and there will be much more interest from utilities, potentially offtake agreements, and various other financial instruments that we could use. With the Turkish operation, we could even have a sort of a bond issue that pays a coupon that's supported, for instance, by our Turkish cash flow. So we want to keep dilution to a minimum. We probably will raise a little bit of money, but timing-wise, for me, the best time to do that would be subsequent to achieving our mining permit.
Right. Okay. And how much are we talking about here?
Oh, between 5 and 10 million Canadian dollars.
Okay.
Yeah, it's not a huge amount.
No.
And if uranium price continues to move and the share prices move up, people has finally recognized this project, because funny enough, a lot of people have not heard about Global Atomic. And I see uranium publications coming out. I just got one this morning talking about every company, and Global Atomic's not there. Like, why aren't people seeing this project? To me, we just have to pound the pavement a little bit and get people aware of it, because it is very significant. I mean, we signed a deal with Orano Mining, the French government, in July of 2017, and the reason they did that is because they want to have an assured supply and augment their feed source for their Sommer operation north of us. They did extensive due diligence on this project, and we weren't as far ahead as we are now. So, this, I think, is a very significant project in the uranium space, but particularly in Niger, where they derive most of their revenue stream from uranium. And they view this project as like the next phase for development in the country.
Okay, so just if I may finish off, can you give me that timeline when you talked about getting into production this cycle, but what are you aiming for? Because, you've done a PEA to PFS standard, but you've still got to get a PFS, you've got to do your feasibility, you've got to do the numbers on the DFS. What's that timeline look like?
That should be finished during 2021, so that, it would be nice to actually start moving dirt towards the end of 21 or early 22.
Okay, and by moving dirt, you literally mean, because you're going underground here, you're moving dirt, transporting it up the road for processing. Is that what's happening?
Well, actually, what I'm meaning is that you would start prepping the site and developing your portal, moving a camp in there to actually start developing the whole infrastructure. So we're right on the power grid. We've got proposals in from solar hybrid suppliers that'll sell us power under a power purchase agreement to keep our power costs low. But Orano gets their power from a coal-fired plant down the road, which happens to be right, in line with us.
Okay, so the question is, when do you think you start taking U3O8 and selling it? When are you producing?
Oh, I would say, if all goes well and COVID doesn't keep everybody shut down for the next year, that by 2022 we'd be selling uranium.
Fantastic. So things are going great guns. You're out there pounding the streets, telling the story. What's the feedback been so far?
Well, aside from people being quite amazed by the project and the numbers coming out of it, it's a lot of people need to learn about it. So this has sort of woken up a few people.
Yeah, I think so. Well, it's exciting times. It's exciting times, Stephen. I think a lot of the generalists seem to be waking up to uranium again, which is fantastic news. They'll need educating because again, it's been quite it's taken us a long time to learn about the ins and outs of it. It's quite an opaque market, but I think it's nice to sort of see them at least asking the questions again. Well, look, best of luck to you. Thanks very much for giving us an update on the PEA and the announcement. Stay in touch and let us know how things are progressing.
We will definitely stay in touch, and you'll be getting our news as it's coming out.
Good man, sir. Thank you very much.